last time I started, I think it was in January, and then I ended on February 9th. I'm starting again on February 9th. This is for options trading. This shows my real-time trade alerts. You can enroll in the 7-day trial at beststockstrategy.com/memberships. It's only $19 for 7 days. And starting for February 9th, we sold a 265 put in MasterCard, picked up 75 cents. This was a B plus grade. Then I sold another put on MasterCard for 50 cents. Low B grade. Low B plus I wouldn't do as a spread because there wouldn't be enough premium. Tesla picked up $435. Sold the March 12th, $550. Then I give the spread leg. So if I sold the $550 and then I would buy the $500. I sold an Amazon call, picked up $184. It didn't use up any additional buying power because we had a short put. Closed out an Amazon position. Closed it out for 45 cents. Sold it for $8.10. So we collected $810 and then we bought it back for 45. It's a good trade. Then I give a summary. February 10th. Bought back Facebook. Kept about 70% of the premium. Sold Tesla. Picked up $445. Give the spread leg. Sold a put in Amazon. Picked up $725. Bought back the Amazon call. Opened it yesterday for $1.84 and then bought it back for 85 cents. So made around $100. Then I give my thoughts, my closing thoughts, February 11th. Bought back MasterCard, bought back Amazon. Amazon closed for an $800 profit. So it's the $760 plus $1.42 for rolling it, less 85 cents. Above is the MasterCard position. Sold it for 50 cents and bought it back for 25. It looks like we only held it for a few days. Open up a new position in Amazon, picked up $430. Picked up $510 on Amazon. February 12th. Sold a $580 put on Tesla, picked up $465. Sold a $600 put, picked up $1,470, almost $1,500 of premium. Amazon picked up almost $500. Then I rolled Tesla from $650 to $620. Then I also sold a $420 and picked up almost $500. So also notice that for Tesla, I reduced the strike from 650 to 620, but I also reduced the number of contracts from 3 to 2. So I cut my risk by closing out 3 contracts and rolling it forward by a week to 2 contracts. And I also reduced my strike price from 650 to 620. So I reduced the strike by $30, and I also reduced the number of contracts from 3 to 2, and I also collected premium of 22 cents. Okay, of $22. Sold another Tesla position, 400. picked up about $800. Here you can see I also rolled Tesla because I wanted to reduce the number of contracts that I had outstanding. So I reduced the number of contracts for February 26th from 2, and then I rolled it forward by 2 weeks to the March 12th, and I reduced the strike price from 610 to 600, and I picked up about $200. I think the big thing here was I wanted to reduce the number of contracts outstanding, so I cut the number of contracts in half, and I closed it out from 2 to 1. Amazon open up a new position. I think right now, during February, and I know like right now it's actually the end of April, but I'm pretty sure that at this moment I really only have positions on Amazon and Tesla. I think I had a position on PayPal as well, but I know that during this time there was a time period when I only had positions on Amazon and Tesla, and I think I even noted it in the alerts. So you'll probably see that message as well later on. Okay, let me see what happened here. So I close out Amazon. I probably shouldn't do this trade review 2.5 months after because then I forget some of the trades. PayPal, yeah, I bought that back. Bought back the call option. Then I sold. So there's the original. VIX is up 7%. Sold an Amazon call. Sold a put in Facebook. Sold another put in Facebook. So here I rolled Tesla from the 550 to the 520, and I reduced the number of contracts outstanding from 2 to 1. I did this just to reduce the number of units outstanding on Tesla. I wanted to reduce the size of the position. Here's the original. So I picked up about $620 total for the position. And now it's just one solitary put contract with a 520 strike that expires in 2 weeks. Open new positions on Facebook and Amazon. Both are B+ grades. A new position on Tesla, picked up $440. February 22nd, open up a new position in Amazon. Tesla again. Apple. Bought back Amazon. Then my thoughts. Sold PayPal. Low A- grade. That's pretty good. I probably should have sold more contracts then, because if it's an A- trade, then that's pretty rare. Here I rolled Tesla from March 5th to March 26th. And I reduced the strike price by $40. Picked up a credit. Tesla apparently fell 10% on February 23rd. Yeah, you have to make sure that you bend but don't break. If I didn't have any existing positions on, then Tesla puts would be a high A- grade, so almost an A grade if you wait. And I think that's really important, why it's vital to be patient and not rush trades, because not only could you actually trade too large and then get forced into a margin call only to then see the stock rebound later on, but you also miss out on opportunities. I didn't trade as large as I would have liked to because I had to make sure that I managed and defended my existing positions. Yep, and I say it here, but once we have existing positions on, we've already committed. Selling puts in Amazon would be a low A minus grade as well. Yeah, look at that. Tesla was down 9%. That's an A minus grade. I mean, look, you pick up $700 for selling a 420 for agreeing to buy Tesla at 420. Closing trade for UNH. That was the original, so kept about 60%. Sold for 110 and closed it for 43 cents. Our 620 was briefly in the money. I actually think Tesla intraday, like a week later or so, or a few days later, fell to 520 from what I recall. Yeah, it did, because I know that at one point Tesla was down around 40% off its low. Bend but don't break. February 24th. See, notice that Tesla was up, but then over the next few days it must have gone down, because I know that intraday, I remember it was down to around the 520 level. A good entry into Apple for 95 strike. I mean, that's pretty great. I actually wish I could buy Apple at 95. I should have definitely traded that larger. B plus grade. S&P's up 44. So here you would think with the S&P up 44, VIX down 7%, VVIX down 3%, Tesla up 6%. You would think that things have stabilized. So the next day the market opened up, it was about even, but volatility's up 3%, which is a little bit of a warning sign. Oh, okay. So then 2 hours later, VIX is up 11% and S&P's down 40. So then I have to roll the position. I roll the two positions to one. So I close out the March 5th, the 520 and the 600, and then I roll it forward to the 590 by 1 week, and then I pick up a credit of around 71 cents. I cut my units in half. I think it's always better to roll early, because you always want to make sure that you preserve buying power and that you never want to feel rushed. You never want to feel stressed out. So I think in this situation where I asked myself, okay, do I really need to make this trade? I just felt more comfortable by reducing the number of units. And if I could just roll it forward by 1 week in time and reduce the number of units, then no problem. I would do that anytime. And I collected 71 cents of credit, so no problem. Is this a necessary trade? Probably not. Tesla is still very far away from testing our strikes, but even so, with the VIX up close to 30% and the VVIX up 11%, if I can reduce risk while also increasing my buying power and collective credit, then it's a good trade. Yeah, I said it very well. I agree with that completely. I mean, I'm a little bit biased because I wrote it. So, but I guess like in hindsight, looking back on it, like over 2 months later, it was a good trade. All right, here it looks like I reduced the number of units from 3 all the way to 1, and I picked up $721. But in exchange for doing that, I had to roll forward the expiration by over 2 months. So I closed out the March 12th, and I closed out the 550, the 590, and the 600, and I rolled it 3 to 1. So I closed out the 3. I rolled it forward by over 2 months, but I also picked up $721, and my strike was pretty good, $575. Just filled this, picked up $720, and I rolled it forward by 2+ months while reducing it from 3 contracts to 1, and also reducing the strike of the highest contract from 600 to 575. I'm going to set a closing order now for 450 for this trade. So if Tesla stabilizes, then I automatically close out the May 575 put contract for a nice profit. Remember that it's possible to win close to 100% of your trades. When an options trader loses money, it's almost always due to them being forced to close their trades because they run out of buying power due to a short-term, large, unexpected price movement. So managing your buying power is extremely important. Actually, it's probably one of the most important things. And to be honest, I was right here because I know Tesla fell to about 520 and then it rebounded. So I was completely right. It's just based upon experience, what I've seen. All right. So here it looks like I rolled up Amazon to pick up an incremental $220. Rolled up the existing position. I feel that Amazon is oversold. Picked up an extra $220, and if I'm wrong, then I can easily roll it down and forward. A lot of carnage today. S&P down 96. VIX up 36%. VVIX up 17%. Amazon down 102. Tesla down 60. Decent day for us. We reduce risk by managing a few positions at the moment. We'll watch the market. We don't have to be too aggressive. During periods of rapid volatility expansion, the market tends to overreact, so you'll need to bend but not break so that you can make significant money once the market stabilizes. February 26th. All right. So I rolled Tesla. I reduced the strike price from 600 to 590, and I rolled it forward by week. I mean, generally, if I'm going to roll something forward, I definitely want to reduce the strike price by more than $10, but because I only picked up 20 cents or $20 per contract, it's not really that much. But I guess I just wanted to give myself an incremental safety net. S&P down 18. So here it looks like it opened. It was up 14. Tesla and Amazon were up, and then S&P closed down 18. So you see, like that shows that the market's weak, where there's a swing of about 32 points, or about 1%. There was a 1% move in the S&P over the last 10 minutes. That's not good. So Amazon was up 35, Tesla down 7. Okay, March 1st. S&P up 60. VIX is down 14%. Just to be clear, after a very volatile day or week, it's best to wait until later in the day to act once you believe things have stabilized, just to ensure that you're not wrong. This doesn't apply to closing trades. When closing trades, it's usually better to do it sooner rather than later. So, closed out PayPal. Really didn't show a large profit on there, but closed out PayPal for 72 cents. The original is below. We sold it for, oh, actually, no, I was wrong. See how the limit says $1.10, but it filled at $1.54. So I got over 50% profit there. 55% gain. No stress, just time decay. Okay, sold another put in Amazon. I should definitely have traded larger in Amazon. I mean, those are a lot of large premiums, $600 per contract. And especially when using portfolio margin, it barely uses up any buying power because it's like more than 2 standard deviations away from the current market price. B plus grade. Then I give the spread leg. The S&P was up 90. So then notice how when there's a lot of volatility, I'm very patient. I don't really open up new trades early in the day. Then I remind people it's best to be cautious. So I rolled forward Amazon, closing out 2 contracts and rolling out by 2 weeks, reduces risk, reduced the size from 2 to 1, and I picked up $124. Bought back MasterCard, bought back UNH. Those are the originals. Profits. We've been very disciplined. In an ideal scenario, the market could fall later today. We would open a new trade while having taken advantage of the opportunity to close out some trades over the past few days. Sold another put in Tesla. Picked up $600 or $580. High B plus. Then it looks like I rolled it because I wanted to close out and reduce the number of contracts. So I reduced it from 3 to 2, where I close out the March 19th 520 and the March 26th 580, and I rolled it forward to April. Rolled 3 contracts to 2. So basically I reduced my outstanding contracts by 1 and picked up $271 in exchange for extending my duration by 1 week. More Amazon, that's a great trade. High B plus, S&P down 31. So it looks like it was up 90 the day prior, and then it was down 31. So I'd probably be thinking that, all right, let's take a wait and see approach. So relatively flat. And at the end of the day, we'll see if there are new positions to open. So I'm not very active. And then, so I sent a message at 9:34 and then at 2 that the S&P was down 25. And then the S&P fell 50. So yeah, that was good to not make trades. VIX up 10%, VVIX up 5%, Amazon down 90, Tesla down 33. I know it's difficult for some people to be patient, but patience will earn you money. We still have significant safety nets for our existing positions when comparing the strike price versus the current market price, so it's more a question of waiting for the market to stabilize. All right. Then I reduced the number of contracts for Amazon, closed out 2 and rolled 1. You can see that during this situation, I have no idea what's going to happen. I just know that the market is tanking. So I want to reduce the number of contracts that I have in my account as much as possible without significantly extending duration unless I absolutely have to. So that's pretty much what I'm doing. I'm reducing contracts, picking off like 1 or 2 contracts here and there, but also picking up a credit as well. Like here for Amazon, I picked up 17 cents, which doesn't seem like much, but I reduced the number of contracts outstanding in this position by half. So I closed out 2 and then I opened up 1, and I got paid to do it. And I significantly increased my buying power. So it was a good trade. The biggest goal of this trade is obviously to cut my risk in half. With the market being so volatile, I'm not concerned about the strikes getting challenged, but I definitely am concerned with a major sell-off leading to a sharp volatility expansion event, which will cause our existing positions to show temporary losses. During these times, the most important thing is having buying power. This will enable you to open up new trades that will be immensely profitable. It's the difference between making money and losing money during a sell-off. All right. So here, the VIX is up 15, volatility is down, Amazon and Tesla are up, but again, we've seen this before. During pullbacks, the market sells off heading into the close, so we will be patient. I said this at 9:37. All right. Then at 11, I said it seems like the market is uncertain what direction it wants to go in. Then at 2, the S&P is down 90, VIX is up almost 20%. Things will be fine. Just need to wait for things to stabilize. Earlier today, I was thinking about making this trade, and I should have done it. Yeah, I definitely should have done that, because it looks like I could have done it. I don't know if I would have paid a credit. Rather, I don't know if I would have paid a debit for it, because usually I always roll for credits. But even if I paid like $1 or $2 for it, now it's so if I paid $100 or $200 for it, it's currently trading at like $2,500, the mid price between the bid and the ask. All right, S&P down 51. I mean, it's a lot better than 90. So VIX up almost 7%. So if the intraday the S&P was down 90 and then it closed down 51, I would have thought that that would be a little bit of a bullish sign. So I'd be very careful. Tesla down almost 32, PayPal down 6%. While it's possible that the market may continue to head lower, I think that things will stabilize in the near future. We have done a great job so far of managing the sell-off, and I expect that to continue. Okay, so March 5th, it looks like the S&P rebounded because it was down 90 and then it closed down 51 and then it opened up around 30. So we'll wait and be patient. So here I just wanted to roll. So I rolled from April to May. I just wanted to reduce the strike price by $55. And then here I rolled from April to July in order to reduce the strike price by $80. But I mean, look, I got paid $303 per contract, so $606 here. And I got paid $227 here. And once it stabilizes, I can always roll it back, which I have done. And I'll show you those trades as well. Meaning that just because I roll it to July right now to give myself additional leeway and additional safety net, it doesn't mean that I have to wait until July for it to expire. I can always roll that back from July to June to May, etc. So reduce the strike significantly, collected a credit and extended duration, volatility is down despite the sell-off continuing. That's usually a good indicator that there isn't a significant amount of fear or panic. Bought back Facebook, closing trade, close for a small profit, original is here. The goal is to increase buying power as high as possible and have a large safety net with all our existing positions. In the worst case, if the market continues to fall, then we will buy back the short put, buy in the money at the money put, sell in the money put, and then sell short-dated calls against it. But we aren't at that point yet. Yeah, that makes sense. Amazon just turned positive. Let's see how this plays out. The market is way off its lows. Tesla's $50 off its low for the day, which is significant because $50 represents almost a 10% intraday move. So March 5th must have been the day when it fell to about like 520. Remember, the real enemy is not necessarily the strike price. It's more the volatility expansion. That's why it's so vital to leave adequate buying power. It's oftentimes the difference between making money and losing money. Even so, if the market continues to fall, we will flip the position like I mentioned earlier and sell it in the money put. But right now the market is rallying. Just an FYI, Tesla at its low today fell 40% in about 6 weeks. That's pretty dramatic. And we did extremely well. And we managed it. My point is that when trading, you're going to have to take into account large outlier moves. Trading isn't just about making easy money. It's also about defending positions and guarding against outlier moves. It's also another reason not to trade too large. Traders who trade too large may have been forced to close out positions, whereas others may end up making money from this position. It's always about bend but don't break and have a plan. I was completely okay with Tesla falling more, and then we would go long by selling it in the money put. S&P up 73, VIX down 14%, below 25 after exceeding 30 earlier today. VVIX down. Amazon, Tesla down, but way off its lows. Once things stabilize, we'll start bringing in the expirations of some of the positions we rolled. Having expirations of 77 and 133 days is not ideal. And we'll easily work on that once things are more stable. All right, March 8th. Actually, I'm going to end it here. And I'm going to do a follow-up video because this video is already a half hour. So I'm going to start again at March 8th. Okay?